Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is March 10th, 2025, and we are looking at Bitcoin. As always, we're going to follow up with where we left off on Friday's video. And one of the scenarios that I pointed out that could happen has now happened. So I did mention that if, on Friday, where were we? Friday, so we've got our Monday candle. Friday, yeah, it was right around that close, right around $86,000, almost $87,000. We had a low at around 84,600. And I basically said, if $85,000 is dropped, then we're looking $80,000 to $82,000 initially. And anywhere below there, we're running the actual $78,000 low and lower. And that is exactly what we got. So on the Sunday candle here, I believe, yeah, it was the Sunday candle that dropped through $85,000. Went down and closed below this 81,444. That was the key area that the bulls needed to hold, especially on a close. And I had mentioned anywhere below there, we're going to be running the low. We did that on Monday, did bounce above and close above. But now the Tuesday session is open, even though it's still Monday for me and for many here in the United States. We are now pushing lower. And, one of the bigger things was like we saw the lower second standard deviation was right around and slightly below the $78,000 low after the rejection at the basis band and right in the thick of the supports there, or prior support at, essentially you can call it 89 to 92 up there. We were looking for a retest of the lower second. Right now it's riding the bands down in this case. And early in this Tuesday session, we see it dipping down below into the $76,000 area. It wouldn't take much to come down and tag our zone on the weekly. This is from the prior highs of the range last year from, essentially right before the halving for Bitcoin in April. So essentially March all the way until, started to resolve basically in fall, right? And really breaking out and resolving in November. So it was essentially most of last year, and really just ran November and then had sharp corrections in December, and then of course January again, and now February dumped out into March. So March is the breakdown here. End of February into March, and we're getting the breakdown in earnest now. Towards this 73,835, which was that accumulation high of that prior range from last year. And the last kind of, lower high in that range was around $68,000. So just to give you the context of that and kind of where things are on longer term time frames, like the weekly. You have to forgive me. My voice is not doing well today. We see that the lower second is right around $75,000. So I had mentioned, kind of drop 78. We're looking 75 to 78. And anywhere below there, we're looking for, a move into this zone initially between this high and the swing high here. And this high is coming in at $68,000 or slightly over $68,000 on a close. And in fact, we can readjust this a little bit. It's technically a little bit higher there. So let's go ahead and just readjust that to actually be on the close open there. So you can still call it right around $68,000. It's $68,244 to $73,835. That is kind of the main area to look for next for major support area to be tested, right? It was prior resistance, and then we had a close open right in it on the 68, almost $69,000, and then the big pump up to new all-time highs, right? So at this particular moment, we're kind of looking in that area. But first, I would pay attention to where the lower second is, right around $75,000. If we do start to see like weeklies close below here, that would be expansion into support. Likely going to head down lower. I could see, 65 and down by the lower third and maybe even, running some important areas here. But I want to get into some fundamentals first before we actually start entertaining that, because this is still a compression of the weekly bands. And we are just now seeing the first etchings of volatility expansion within the band. So we do have BBWP at 26/7. So we are in an expansion phase for price action as it relates to the bands, but we have not seen volatility expansion of the bands just yet. It's just volatility within the bands. And if we do see volatility expanding outside of the lower second standard deviation, that's where the move is starting to get expansion into an area of support here. And in that case, I would be on the lookout for potential reversals around the lower second. Even if it does, wick into it and into the highs over here, I'd be very aware of possible reversals around this lower second standard deviation. If we do start to see closes right in and around the support below the lower second, I would look for close opens that then start to rip back to the upside and maybe run the bands for another run of the highs up here. So that's a little bit forward looking. That is one possibility, though. Let's check on a few things for the weekly here. So you see the etchings of expansion from a nice compression there. The compression is still ongoing from the band perspective, but price is now getting that expansion from within the bands towards that lower second standard deviation. We see that, excuse me, we see that stochastic momentum, our trendline regression areas of interest have broken down. Those are just confirmation. You don't count on them to bounce. They're just giving you extra information. So we kind of got this guy here, right? And then we've got this guy here that broke down. And we were looking at that a little while ago, kind of, this little zone that the weekly need to hold up with in terms of trendline regression for a regular stochastic, not a Stoch RSI. So this is measuring close over close price momentum. What is the pivot? The pivot is $99,000 in the weekly, and we're a little far away from that. So this move is ongoing, and it is pressure down for a little while now. We'll likely see, we'll have to see some reaccumulation, or at least a sharp buyback. Daily is, we're looking at $87,000. It is headed down into the, and already in the bearish control zone. For momentum, we're getting a little bit of re-expansion. Now we'll see if this actually hits redline. I would be surprised if it did, but this was a really, really deep compression, and we hadn't seen compression on the daily like this since back here in 2023, in January of 23. So it's been a little while since we've seen this kind of a compression on the daily. So this move is, quite exaggerated in terms of its volatility. If it does re-expand below the lower second, then we can start entertaining the lower third area price replace band somewhere around $70,000, which is, of course, is a test right in the thick of the top side of the supports here. So I wouldn't be surprised to see it at this point. But I also wouldn't be surprised if price did try to pop back up above $78,000. And we'll take a look at RSI here and kind of see what's going on. Because what we're going to start seeing is in-trend bullish divergence starting to build, in my opinion here. And I want to point out the bear critical zone here at 58, almost $59,000. That is the 20 read of the bearish control zone down here. And that is something to note. That is an area that would be an extreme and also would put Bitcoin out of the daily possibility in this current move without a low being set somewhere in line of missing out on regular bullish divergence. But because this is a downtrend, we have lower lows on price action. We're going to evaluate and see where we might get higher lows on RSI to start building up drives of bullish divergence that could potentially turn this thing around or give us the bias that that a major low is being set. And in this case, it's still an ongoing move. So we don't fade moves in progress, right? This is still a move in progress. We got to see kind of what levels it hits, what levels we're interested in. And, this is a pretty extreme move. In this case, we've got, let's go ahead and turn on a few price ranges here. We've got quite the correction going on. And I know a lot of people are getting scared, but I don't really think it's worth getting scared. Let's take a look at this correction from this range last year. Excuse me. It was a 33.5% correction, a little bit more than a 33.5% correction. We had one of the larger corrections at around 21%. We had another 21% here. I believe this correction coming off the bear market low is 22%. And then we start getting into last cycle. In 2020, we had a 31% correction. Prior to getting the really big correction, we also had a few more pretty steep corrections on the way up to the all-time high here, with a 26% correction up to the then all-time high at 65. And this was, the really big correction was from March into April. So we had March into April, and then we had some lower high distribution structure being painted here. We had lower low, lower high, dump out, 55%. Reaccumulation, pop right back up to the all-time high to create a new all-time high. Did not close above 65 on the monthly time frame, which was the big warning that this wasn't going to push much higher. It was also entering kind of mean reversion territory back to the highs anyway at the time. So this was definitely a sell signal at that particular point after swinging up above the all-time high, especially for longer term time frames. Big 52% correction. Now, of course, we had a big bear market, and then coming out of it, we were getting our 20% corrections all the way through, including after ETFs launched. We got a deep correction of just shy or just around 21%. Then we saw our 33%. And now where are we in terms of correction? Let's go ahead and take a look. I do apologize about the coughing. So far we're at about 30%. Yeah, we're at almost 30% here so far. So it's definitely a big correction. It is not the biggest that we've seen, even, within the past year or so. There was quite a few very large corrections within this accumulation structure last year. And, going in to retest it as support is, highly likely from here. Doesn't mean it's going to, but it's very highly likely. And that is definitely what we're seeing on the weekly. We're seeing that continuation on the daily. We're seeing it in an expansion. We're at an 88/74 read for volatility. It's pushing the lower second. It can keep riding this down or even spike through for a nice wick down into test that prior range around the highs. So definitely in the cards. Where does this change? Where does it turn around, at least from here? Well, that would be on, again, just like Friday, closes back above this high here at around $93,000, right? And then we do have some weekly overhead resistance that we have to pay attention to in that area. But so far, on the daily, the last lower high is right here at $93,000. And of course, Bitcoin is far away from that at this point. Doesn't mean that it can't make up ground, right? And actually take that out on a higher high, but then we still need to see structure building. But more likely is we'll likely see another lower high while the weekly remains pretty bearish in terms of its momentum and volatility and all that. We'll see if Bitcoin does push down to some of those levels, 68 to 73, 835 or so, and maybe gets a lot of volume coming in that could spike it in a big way and kind of, sellers kind of take profit, buyers step in and start pushing price above this last high. We could see something like that. What would make it more likely is if we see continued closures above 78,000 or 78,167 in this case. That would be kind of what the bull's goal would be, is kind of to hold this 78,167 on a close and then try for a trend break. But more likely during a phase like this, we're probably going to see another lower high. So, whether that's, heading down to test the range down below and then spiking up and getting a lower high and then trying to higher low, equal low its way out, and then kind of getting like a W formation or a higher low or, maybe even a lower low and then try to take it out. Whatever it looks like, we're probably going to be looking for another lower high at this point. Really depends, again, in my opinion, on, if 78 can remain a closing level of importance, meaning that even though we see swings down below, we see continued closes above 78. Otherwise, we're looking to 75, and then below there, we're looking 73,835 to $68,000 initially, somewhere in there. You can refine your targets. Some people have very specific targets in those areas. I do too. I like to keep these a little bit more general. You make your own decisions on where you want to get in. There's, volume metrics. There's all kinds of different things that you can be applying to that, whether it's VPVR, daily volume candles, Fibonacci levels, really doesn't matter, right? Whatever you prefer. But in general, that's going to be the area of interest is 68 to 73,835 on any closes below $75,000 or any real price action below $75,000. Just keep in mind that, Bull's goal right now is to kind of close above the lower second, which is right at $75,000. And again, we can pull a fib from this prior range and we can kind of deconstruct what I had mentioned on Friday real quick here, and even gave you a little update over the weekend on what I was looking for. I had mentioned that we had continued to see on 4-hour closes, we had continued to see Bitcoin testing and closing above the 1414 at 85. And if that was lost, we were going to run, $80,000 to $82,000 at that higher low that was put in at this 81.44. And we had previously seen, closes coming in above that, it closed above and front run the 1272. Anywhere below there, we're looking down to the next levels. And this low over here by the 1.168, which we had previously seen closes above. Push down now. We'll see if we get this 4-hour close below or if this 78,181 is going to hold up. If not, we're looking 75 to the prior range highs at that 73,835. So now working our way back up, if we can see continued closures above 78, then we can start looking to $80,000 to $82,000 and then back up to the basis band and really to start getting things rolling for the bulls. Closes above around this $84,000, 4-hour lower high would break the downtrend. And then it's possible we can start looking to 85 again and maybe even a retest of this little consolidation before the move down, just above 85 at 86.5 or so. Doesn't do much for the daily, but it could be a start of possibly a run for that 93 on the daily, or maybe another lower high that's a little bit more attainable to beat on the daily if it does start to reject in and around those areas. But that's all provided that it's not just continuation. And right now, the 4-hour is just showing continuation down. So this was, a little bit of expansion and a turn down and kind of a grind down in terms of price action on the 4-hour. We can take a look and see what we're getting here. So Stoke remains down on closes below $80,000. And, we're kind of, as it's trading right now with this 4-hour candle open, kind of putting it out of this current downtrends, bullish divergence kind of play. Even on a bounce for right now, we'll see where this closes at, but it's possible if it closes back above 78, it looks a little better. Maybe if it puts in a low, it can get some, bullish divergence on equal lows. It's not very powerful in that case, but at least good enough to try to pop it up. But again, don't fade a move in progress until you start seeing the actual signs that it's turning around. Right now, just giving you maybe a few scenarios here. I think the 12 hours even, getting some re-expansion to the downside. Still pretty expanded on the bands here. You can look here, lower third. Where is it? 73,835. So definitely on the table for the 12-hour here. We did get the previous 12-hour candle that closed the Monday candle. Closed with the Monday candle, I should say. Did close below the lower second, kicking off expansion again to the downside. And, this is where I would start to look for bullish divergence, starting to build 12-hour and into the daily. Possibly then we start looking for not the 2-day to start building bullish divergence, but we start keeping an eye on stochastic momentum, which is around $83,000 for the 2-day, and then see if the bulls can't work their way out of this. I think it's going to take a little while. We do have some news coming up. I believe tomorrow, the working group for Cynthia Loomis is going to be talking likely about the Bitcoin Act, which is the accumulation bill that has passed committee in the Senate, and we'll see kind of where things head. So, yeah, it should be very interesting tomorrow to see if Price has any reaction to what is said. I suspect she's probably going to talk about the stablecoin bill at some point too. I don't know if that's on the docket for tomorrow, but I would keep an eye on kind of news out of Washington, D.C. in that regard that could, either increase or maybe even decrease volatility, as it's a very highly volatile environment right now on lower term timeframes, and possibly could turn into a high volatility environment on the weekly, as we are seeing that it is higher volatility within the bands, but in the context of a compression phase for the bands. So in that regard, I'm really looking for, either a close below the lower second and expansion into this structure, or a bounce from it at around that 75. And that is on a closing basis, meaning that price can wick through the lower second. It's all about closes when looking at band expansion. So, excuse me. That's going to be pretty much it. We did see the, on the weekly open, Bitcoin did test the lower first, 84,161, before dumping out. And, yeah, there's not much more to say. Nice buyback originally off of this, but the warning was, in the prior week, closing below that lower first, retest, and then typically you're playing between the lower first and lower second on a weekly basis. And wicks can kind of land anywhere. We'll see if it closes below the lower second, though. Monthly, everybody's saying it's a bear market. It's a bear market. Landy, it's a bear market. It's all over. It's all over. Well, I would like to point out that we have this is just a high. We have higher low, higher high structure. Again, coming off of the bear market lows, we have an uptrend. The only way that this breaks is with a lower low below $49,000. That would be a clean break of trend. Warnings on closes below $59,000, because that is the closing higher low on a monthly. But realistically, what I'm looking for is another higher low on the monthly, and then we have to watch this higher high at 109,360. That's where we have to really pay attention, because if we get a lower high that takes out a higher low that's closer, then we get a structural change that is highly likely to lead to a bear market. Right now, we're just not there in terms of structure. So we can take a look at the monthly. We do have some divergence here going on. I did point this out fairly recently. 101,800 is going to be the pivot number there. You can see that we also have bearish divergence that is playing out currently and dropping the bullish control zone here for the monthly at this current moment. As for my opinion, a lot of people ask my opinion. I do think that some of the extremely low targets that I see out there are kind of crazy. And I'm going to switch to a chart real quick here that's fully white. So please prepare yourself. It will blind you initially. 1, 2, 3. Now, this is Bitcoin production cost from Caprioli Investments. And what we see here is electrical cost right at around $57,000, right? Can this continue down? Yes. But we want to keep a close eye on this if things do hit extremes to the downside. Main reason why is the only time that we've seen Bitcoin actually spike into electrical cost outside of riding electrical cost up during a bull run in 2016 was back here in March of 2020, March 12th, in fact. It took a global economic shutdown to actually hit electrical cost, and it was maybe for 5 minutes that it was under it. You couldn't even get bids in. So understand that it's very rare to hit production cost for electricity for miners, and that's just taking and factoring in the electrical costs for miners in Bitcoin dollar terms. In this case, we do see miner capitulation. Price is below total production cost, which is roughly around 78,600 or so. Technically, it's showing at 80. I would say it's around 78 now. That's more accurate and within the margin of error for what we're seeing internally right now. Now, the $57,000 is also within the margin of error for electrical cost. Some are going to be a little bit lower. Some are going to be a little bit higher when calculated into Bitcoin dollar terms for just calculating electricity. If it were to get anywhere near electrical cost, let me tell you something, especially below, it means you're picking up Bitcoin for less than it costs to mine it just at its base level electrical cost for miners, well below production costs. So I call that opportunity. I'm not seeing the $40,000 lower first like many are seeing. And in fact, we have the basis band on the monthly right there at around $62,000. If this continues down towards it, you can call it $60,000 to $62,000. Very close, very, very close to the $59,000. But it's not until we saw closes under this that I would say, like, okay, that's a warning sign. We closed below a monthly high or low close open. So be aware of lower highs when it pops back up. So we still need to see that phase to actually transition into a bear market or a bearish structure, I should say. And we're just not there yet. So this is a correction and a big one. So yeah, I mentioned this, close open, anywhere below the upper first, not good for bulls. And it's turning out to not be good for bulls. So we'll see kind of how things play out from here throughout the rest of the week. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I will have a Learn TA with Landy tomorrow with Peace, Love, Music over at Deorganized. And I will, of course, you can find me on Spaces events throughout the week. And I'll be back here on Wednesday with the Wednesday check-in. Don't get scared. It's okay. They want your Bitcoin. I'll leave you with this. One last thing. I got to do it. I'll leave you with this, not this one. This is Bitcoin exchange reserves. Now, this is how much Bitcoin is on the exchanges. You'll see that it was entering an uptrend basically throughout its life until 2020. In March of 2020, it got its first major downtrend. Did get a little bit of an uptrend coming into the highs of 2021, went sideways, got some lower highs, and then broke down and has been trending down ever since and really hit its stride to the downside once ETFs were launched. So in a post-ETF world, we're seeing, spot ETF world, we're seeing Bitcoin exchange reserves from centralized exchanges falling rapidly. And they continue to fall even on this move down. So understand that what's happening here is if you're selling Bitcoin on exchanges, bigger players are buying them so that they can repackage them as products from the traditional market side and sell them right back to everybody. So I'll leave you with that. You have a great night, and I'll talk to you again on Wednesday. Take care. Landy out.